So alternative dispute resolution just means an avenue for dispute resolution that is alternative to the court. That's not the court. So CEDRC is one such body in the capital market. So CEDRC is a very important component in the investor protection infrastructure in the capital market. Okay, so specifically, CEDRC's role is to resolve monetary disputes between individual investors and capital market, also proprietors and capital market intermediaries that are CEDRC members. So capital market intermediaries, I'm sure all of you are already informed that they're basically entities that market and sell investment products to the public. So the dispute resolution process at CEDRC consists of 3 stages: case management, mediation, and adjudication. And most importantly, CEDRC services are free for investors with claims not exceeding 250,000 ringgit. Okay, how does CEDRC benefit investors? Among others, CEDRC benefits investors by improving awareness of investor protection in the capital market and heightening investor comprehension about their investments, as well as investors' responsibility over their own investments. Okay, this is the more important information. Who is eligible to file a claim at CEDRC? So first, you must be an individual investor or a sole proprietor. This means that if you are an investor, but you're a corporation or you're an institutional investor, basically, we cannot accept your claim for a monetary dispute with your in relation to your investment. So secondly, the claim must be against a CEDRC member. At present, CEDRC has approximately 200 members, like a bit less than that. You can find the full list of capital market intermediaries that are CEDRC members on CEDRC's website. Okay, third, your claim must involve a capital market product or service. Fourth, the claim must relate to a quantifiable monetary loss. And fifth, CEDRC will not accept claims where the investor has not referred the dispute or the complaint to the capital market intermediary itself. So meaning if an investor comes to us bringing a claim and they tell us that they actually haven't reached out to the relevant capital market intermediary, unfortunately, CEDRC cannot handle such claims. So you have to reach out to the relevant capital market intermediary first. Okay, so not everything in the capital market actually falls under CEDRC's purview. So if you have a monetary dispute which relates to your investment in securities, derivatives, private retirement scheme, fund management, or unit trust, then you may bring such dispute to CEDRC. However, if you invest in any products in the capital market not listed here, we may not handle your claim. However, we do advise you to seek the SC's help. Okay, CEDRC's dispute resolution process, as mentioned, consists of 3 stages, which are case management, mediation, and adjudication. However, first, you have to, again, lodge the complaint with the relevant capital market intermediary first. And if you're not satisfied with the intermediary's response or you receive no response, then you can lodge your complaint with CEDRC. So once you do that, once all eligibility criteria have been fulfilled, all the terms and conditions are fulfilled as well, so the first stage, which is case management, will start. So during case management, a CEDRC case manager will investigate the matter by gathering all the relevant documents and information from both sides, both parties. So after all the relevant information and documents have been gathered, so the case will progress on to mediation, which is the second stage. And during mediation, a CEDRC mediator will facilitate a discussion between the parties to help them reach a settlement that's mutually agreeable to both parties. So if mediation is unsuccessful, parties will progress on to adjudication, where a CEDRC adjudicator will consider the matter and pronounce a decision over the matter. Okay, if you have a capital market dispute and you want to lodge a complaint with CEDRC, you can go onto our website, download our claim form, and then you can complete the claim form and you can email the claim form alongside relevant documents to info@cedrc.com.my. Then a CEDRC case manager will contact you in due course. Okay, if you have any further questions, you can send your claims and inquiries via info@cedrc.com.my. You can call us at 0322822280, or you can even follow us on social media where we will update all our activities and relevant information for investors and capital market intermediaries. That will be all from me today. Thank you so much, Bursa, for having us, and I hope you guys enjoy the briefing by Mr. Chin.
Right, thank you so much, Ms. Nur Fatiha, for the brief session. So in a bit, we will begin our webinar. So let me share the slide first. Oh. Okay, hello everyone. May you guys have a pleasant day of today. So today webinar the topic is time your entry and exit with a moving average. So before I start the webinar, let me read the disclaimer a bit. So the information in this webinar is for general information purpose only and is provided on an as basis without any representation or warranty of any kinds. The information does not constitute a legal, financial, trading, or investment advice, and it does not make any recommendations or endorsement regarding any and all product mentioned. So Bursa Malaysia and also the presenter do not accept any liability for the information provided during the presentation and in the presentation slides, and also for any investment and trading decision on the basis of this information. All right, so let's get to know our speaker today, which is Mr. Yong Chee. So Mr. Yong Chee is the founder and the chief trainer for a share world consulting. He usually applied technical analysis in his trading and mainly focus on the share movement analysis, price volume analysis, and also indicator and candlestick formation to observe the buying interest and selling pressure and justify the key support and resistance level. So usually he also a full-time trader and also the founder of 52K, which is 50,000 follower Facebook page known as a Share World Consulting, which aim to educate the public about the financial and stock trading knowledge. And he has around 10-year market experience and has mentored around 1,000 students through an in-depth stock trading course. And he's also a founder of a 11,000 member Telegram stock discussion group. So the qualifications that he has is he has completed certificate and professional level of chartered accountant in England and Wales, and he's also a chartered financial analyst, and he's also a certified financial planner. Other than that, he's also a SC licensing examination and a dealer of TA securities. So Mr. Yong Chee, hi.
Hello, everyone.
Yeah, can you begin your webinar now?
Yeah, sure.
All right, I will pass the webinar to you so you can start your webinar now. All right.
Okay, sure. Let me share my screen now. Can you guys see my slide? Oh. Okay. Hi, everyone. Okay, can hear me now? Good evening. If you can hear me, can you type one? Okay, can you type one? Okay, good. Thank you, everyone. Okay, so let's start. Okay, so today our topic is time your entry and exit with moving averages. Okay, so before the webinar, I've already received a question asking that, oh, actually the moving averages is a lagging indicator. Is there any other indicator or other thing which can like combine with the moving average? We call it MA, so that for us to predict the stock price easier. So actually I've already typed in the chat box, just that during the Q&A session, we can discuss more about it lah. Okay, so this is the index of it. So first of all, we will discuss what is different between SMA and EMA, and how to determine the trend using MA, which is moving average, and our trading plan and also case study. Then will be our Q&A. So if anyone here would like to ask more about other indicator or how to, combination of different indicators in the trading activities, so we can discuss over there in the Q&A sessions. So let's begin. Okay, first of all, the SMA, which is the simple moving average, is basically is just to smooth out the price data. Basically, we can call it average. Later we have a few calculation question for the audience to test the your understanding on it, but it's a very easy one. Okay, so basically the moving average, it can act as the key support and resistance, because it can also use to analyze the trend direction. When the MA start to trend out, meaning it's an uptrend. When the MA trending down, is a downtrend. As simple as that. It's not a very we call it accurate price support or resistance, like 1 ringgit, 1.05, like that. It will have some decimal places because it is an average price. Okay. It also serves as a basis for other indicator, such as where we call it MACD, which is the MACD. There's the basis of it. Okay, so this is the like the calculation of it. Basically, it uses the number of the period divided by the total sum of it. Okay, become the MA. So you will be hearing a lot like MA10, MA20, MA5. It means that there is the average of the 5 days price, average of the 10 days price, average of the 20 days price. Okay, as simple as that. So until this part, everyone okay? If okay, you comment okay. You comment okay. So let me know if all of you okay. It's a simple part. Okay, pretty good. I saw a lot of people reply. Okay, so let's go to a very like the basic one. So basically, for example, let's say you see here week one. Week one meaning the first week. The first week, let's say the 5 days price. You see here. Okay, 2 ringgit, 2.5, 3 ringgit, 2.5, 2 ringgit. 5 days price. So in total, for the week one, the total price is 12 ringgit, for example. Okay, so for week two, the 5 days price of week two, the day one 3 ringgit, the second day 3.3, 3.5, 3.7, and 4. Okay, so the total price of the week two, you can see the red color number here is 17.5. 17.5. Okay, so you can see we have a very easy question here. Let's say to calculate, to calculate the MA5, you can use your phone. To calculate MA5, how to calculate MA5? Meaning, like what we said earlier, is the average of the period. The total sum we divide by the total period. So MA5, we use the sum of the 17.5, we divide by 5. Okay, so the total, meaning the end result is 4.6. Okay, you can see here the 4.6. Okay, the 4.6. Okay, so some people might ask, why we use the 17.5? Okay, some people might ask, hey, why we use the 17.5 instead of the week one total of 12? Okay, because MA5, we capture the nearest 5 days average price. So you can see the week 2, which is the nearest 5 days price, the total of it is 17.5. That's why we use the 17.5 divide by 5. Okay, it's not using the 12, it's not using the total of the first week price, yeah. Okay, so if we are calculating MA10, so we use the sum of the week 1 and week 2, meaning 12 and 17.5. We add out, then we divide by 10, because 10 is the number of periods. 10 is the total number of periods. So it will be 4.05. Let me calculate now. Let me double check. Okay. Oh, yeah, I think the slide got problem. Sorry. The MA5 should be 3.5. Sorry, I think this one earlier we not change the price, but the calculation remain the same. It's using 17.5 divided by 5. Okay, so the answer is 3.5. Okay, thanks for reminding, guys. So for the MA10, we use 12 plus 17.5 divided by 10. Yes, the answer is 2.95. 2.95. Okay, so just because of the slide got a mistake. Basically, the calculation formula is the same. And yes, MA10 2.95 and MA5 3.5. Okay, so let's do another like more advanced calculation, but it's the same actually. Okay, so another question. Okay, so what is the 3-day SMA if the stock as 26, 27, and 28 respectively? Okay, we calculate the easier one first. The easier one first. Let's say today is 26. Let's say today is 26. So you want to calculate the 3-day SMA of the date as at 26. Okay, can everyone here help to give a figure? 3 days should be include the 26 itself 1.3 and 26 1.3, then 23 1.35 and 22 1.2. These 3 figures we add out, then we divide by 3. Okay, we add out, then we divide by 3. Okay, anyone? We have the answer in the next slide, but I will still calculate together with you all. Okay, correct. The answer is 1.28, 1.283. Okay, you use the 3-day including 26, including 26 of September, meaning you use 26 of September 1.3, then you add up 23 of September 1.35, then you add up 22nd of September 1.2. You add all the 3 figures up, then you divide by 3. Then you will get 1.283. You will get 1.283. Okay, then let's imagine this. You want to calculate 27. Okay, let's say today is 27. You don't care about the 28th of September, the 1.5 ringgit. Let's say today is 27th of September. Today is 27th of September. So you want to calculate the 27th of September that day. What is the 3-day SMA price? Okay, what is the 3-day SMA price? You should use the 27th September 1.25 ringgit, 26th September 1.3, and also 23rd of September 1.35. You add these 3 out and you divide by 3. You add these 3 out and you divide by 3. Okay. If you add out 1.35, 1.3, and also 1.25, you will get 3.9. Then you divide by 3. The answer is 1.3. The answer is 1.3. Correct. Okay. I saw some of you started to give respond. So if you are okay, if you understand, you can join the question and give some answers. If you're wrong, no worries, because there's just like some activities or some interaction activity. If you are answering correctly, so congratulations. So here comes to the last part of the 3 days SMA question. Let's say today is 28th of September. Today is 28th of September. Calculate 3-day SMA. Okay, meaning you should use the 1.5 plus 1.25 plus 1.3. Okay, so you will get a total of 4.05, then you divide by 3. The answer is 1.35. Correct. I saw a lot of you answering this one correct. Okay, so I believe this one is an easier interaction which can let us to understand the SMA calculation easier. Okay, so if like anyone here okay with this session, type an okay. Let me know. Okay, good. So we will go to the next sessions. Let me see. Okay, a lot of you commenting. Okay, great. Okay, so here is all the answers that we calculated just now. Okay, what does all the figures tell us? You can see the price, the average price, because the SMA is already an average price. So you can see the average price already started going up, increasing. We should say increasing. Okay, 26th of September, the average price is 1.283. 27, the average price is 1.3. 28, the average price is 1.35. Okay, it means that average rate, on average, the stock price, the average of it is going up. So what does it mean? It means that, let's see here, the stock is currently in a short-term bullish trend. Bullish, easy. Why? Because the stock price average increasing. Okay, so this part understand, but why is it short-term? Why is it short-term bullish, but it's not like mid-term or long-term bullish? Why is it short-term bullish? Because the example that we are using just now, we calculate it based on 3-day SMA. So the 3-day is really short-term. We just use the 3-day average price. If you want to calculate the mid-term or long-term, so you can use 50 days SMA, 20-day SMA. So in our case study, our activity just now, we use the very short-term one. So the conclusion of it will become short-term bullish. Okay, this part. So let's say this one is the last activity of these sessions. Okay, let's say today is 28th of September. If you want to maintain a 3-day MA at 1.3, okay, RM1.30. What should be the 28th September, the stock price? What should be the stock price on 28th of September? Anyone? Wow, so fast. Okay, I calculate with you all together. I didn't see answer. 1.3, you times 3, you minus 1.25, you minus 1.3. So the answer is 1.35. Correct. Okay. Yes. Jason, usually we use the closing price. So the answer is 1.35. Basically, if you're able to guess this part correct, meaning you already know the calculation of the NA already. Basically, you already manage it. You already understand the whole thing of it. Okay, so just now, yeah, 1.35 is this part, 1.35. Then this one is the we are sharing about the golden cross and also the death cross at this moment. Okay, we can see here there's a few types of the strategy, like the short-term one, the medium-term one, and the long-term one. Okay, we can see here the short-term one. The short-term one, the golden cross is that, okay, the short-term moving average, it starts to cross out the other longer-term moving average. Like just now, the example, why we were doing the exercise just now, because we want to understand like how to capture the short-term bullish. Okay, so for example, if let's say your short-term moving average is higher price than the long-term moving average, meaning like just now the conclusion that we made is that the price in short term, meaning in recent, the stop price is going up. The stop price is going up. So short-term strategy, MA5 cross out MA10 or MA10 cross out MA20. In general, it means that a shorter term of the moving average start to move above a longer term of the moving average. Okay, medium term, like just now the example, when just now we talk about the short-term bullish of the MA3, do you all remember? That time I mentioned that if for the medium term or the long term, we will use MA20 or MA50. Okay, it means that, for example, short-term bullish golden cross, it means that MA20, okay, it crossed above MA50. Okay, a shorter term cross above a longer term. Okay, so for a long-term trading strategy, usually we can use, okay, MA50 compared to MA100 or compared to MA200. Sometimes they will compare with even MA240. Okay, why 240? Okay, 1 month, how many trading days? 1 month, 20 on average, 20 trading days, because 1 week, 5 days, 4 weeks, a month. So 20 days, 1 month. Okay, so 20 you times 12 months, so equals to 240. That's why some of them, if you heard outside somebody, some people, they will say that, okay, I use 240 MA 240. Okay, what does it mean? It means that, okay, they used a 1 year average price of the stock as their benchmark. There's the reasoning behind. Yes, sometimes you heard a lot, but you might not understand the reasoning behind. Okay, so today we understand more of it. There's the reason. So why some of them they use midterm is use MA20 or MA60, because MA60 is 1 quarter of trading day, 1 month 20 trading days. So 1 quarter 3 months, 3 months 3 times 20 equals to 60. So MA60 is 1 quarter of the trading days. So some of them, they use midterm, they will use MA50 or MA60. Okay, this part, if okay, comment a okay. Comment a okay. We are trying to let the audience understand all the figure, there's the reasoning behind. Next time, if you heard people saying that MA60, or you know they are using 1 quarter, they are using MA240, or you know they are using 1 year stock price average as benchmark, you will know the reasoning behind already. Okay, good. So the death cross is the totally opposite of it. It means that a longer term, it means that the shorter term of the stock price start to go weak. Okay, so MA5 is lesser than MA10. Okay, it's totally opposite than the golden cross. But this one is just theoretically. So later during the case study that time, we can understand more. Okay, so okay, this part is the EMA. Let's see the Q&A. I think Q&A. Okay, Q&A. I'm not sure if you all can see the Q&A, as in the question asked by some of the audience. Okay, Alvin asked. Okay, actually Q&A is supposed to be at the end of the events, but no worries, we can answer in between. Okay, some of them they ask is like which one is the best? Okay, in short, it's like which one is the best, and like is it differ by a lot, like affected much, like different set of moving average, SMA, EMA, okay, all those. Okay, what I can say is that for me myself personally, I will use SMA, but for a trader who focus on the short-term price movement, like actually I'm the short-term trader also, but I still like SMA lah. Okay, so if you're a short-term trader, you might use EMA, but me personally, I would like SMA, because SMA for me is more smooth. For EMA, they will focus more on the recent stock price, meaning like for example, if like in short term the price fluctuate a lot, so the EMA it will also fluctuate more. So for me, I will prefer SMA. Does this, okay, there's one more audience. Does this MA crossover applies to all time frame? What is the MA for week chart or intraday chart? Same. You can use the same one. For later, I will show to you all what is my own strategy. I can tell now also, my own strategy is that I use MA5 and MA10. I like it very much, even though all my students, we will ask them to use MA5 and MA10 to see the short-term bullish trend. Actually, just now we also talked about it already, but just now the example that we use is MA3. MA3 is also very short-term. That's why it fluctuates a lot. We never really use it in practical. Practically, you can use MA5 and MA10. I answer now, but later in the case study, we can do more. Okay, so back to the slide. For the EMA, actually is more sensitive to the recent prices. So for some traders, if they like those fluctuate a lot, they want to capture the price sensitivity in a faster way, they can use EMA. Okay, but still back to what I said earlier, me personally, maybe it's just my habit lah. I prefer SMA still. Okay, so yeah, this one is mainly weighted on the most recent data lah. Okay, so here comes to the second section of our talk. How to determine the trend using MA. Okay, so we will show several pictures. First picture is that, okay, this picture is using the midterm moving average, which is the moving average 20. Like just now what we said, MA20 is 1 month price. 1 month price. For me, actually, it's very long indeed. 1 month price. Okay. MA60 is 1 quarter price. 1 quarter average price. So MA20, you can use it as one of the, they'll call it as the general benchmark. You will see a lot of people they like to use MA21. For them, stock price move above MA20, meaning this stock is stable. Stock price moves below MA20, this stock is not stable anymore. This, generally speaking, a lot of common traders, they will use this way. Okay. Then, if you are using one more moving average, you can combine MA10 with MA20. You can combine MA10 with MA20. Okay. I saw a question. Hold on. Okay, chat. Some I seen using MA14. Actually, it got different one. I can share more based on my experience. Actually, you can also use. I'm not sure this part will, maybe it might be a little bit deep for some of the audience, but just for sharing purpose. Because Alvin asked, sometimes he has seen some people use MA14. I've also seen people using MA3, MA5, MA8, MA13. What is all these figures? These numbers, actually Fibonacci numbers. I'm not sure whether like audience here, you have learned Fibonacci before, but that one is another topic. So Fibonacci, if you know the calculation of it, you will understand why people use MA3, MA8, MA13. Some weird numbers one. MA21. Like just now what we say is MA20 is the 1 month price They will use MA21. Okay, so a lot of different setup, but usually if the person using that setup is an experienced trader, usually there's reasoning behind one. Just that whether you know or not, like people tell you, review to you or not. There's the thing at the back lah. So I just share more about the Fibonacci setup on the moving average. But still, personally, I will still use MA 5 and 10. Okay, so hope I answered the question. So we continue. MA setup, this one is the double moving average setup, MA 10 and MA 20. So my own chart, I will use this one, MA 5, MA 10, and MA 20. But I still focus on MA 5 and MA 10 in a more frequent basis. Because I'm a short-term momentum trader. So for me, if I wait until a strong stop, when it breaks below MA 20, only I make an exit. For me, it's too late already. Okay, so for example, you see this chart. We use MA 5 and MA 10. You can see the stop price. If the stop is the short-term bullish stop, it will usually move above the MA 5 and MA 10. Okay, when it break below MA 5 and MA 10, then it will reach MA 20. So if let's say I react my own position by selling my position when it breaks below MA 10, so I can secure more profit. If I wait until it confirm break below the MA 20, which is the midterm or the general term, which all the while people using, it will be a little bit late. It will be a little bit late. You compare the chart that we are seeing for now. Then I believe audience, you all able to get it. Okay, so okay, next part is the more advanced part. So until here, everybody okay? Comment and okay for me. Comment and okay for me. So in between, if you have any question you want to ask, you can ask. If I'm able to see the question, then I'll try my best to answer. If I miss your question, you might ask again in the Q&A sessions. Because supposedly the questions should be asked in the Q&A session. Okay, so I saw a lot of okay. Good. Okay. The MA, when it cross up or cross down, not only it indicates that the price is short-term going up or going down, it also might indicate that the trend currently is making a change. Okay, in this case, you can see if some of you here, you have more experience in the chart, you can see that there's a box zone. Actually, this box zone, we call it consolidation box. Consolidation, meaning the stock price move along in the box. It never breaks above, it never breaks below. So it's just like sideways lah. Simple wording is the sideways. It moves sideways in the box. Okay, so if you want to confirm the trend using the moving average, you can also confirm it by studying the chart pattern, the chart formation, I would say. So in this case, you can see that not only the stock price move above the moving average, which means the MA cross out, You can see the short-term moving average, the last part of the arrow, it started moving out. Not only it start to move out, it also start to move above the box zone, the yellow color box. It means what? It means that, oh, this stock currently short-term bullish. Not only is short-term bullish, it also breaks above the earlier resistance zone. So it means that the trend has changed for the consolidation trend to an short-term uptrend. Okay, understand this part maybe a little bit advanced or a little bit difficult. So is that we combine the moving average with the stock pattern, chart pattern. Okay, because all the while the stock price has been moving along inside the box, it never breaks above. So one day, not only it starts to move above moving average, it starts to also break above the box, meaning the stock price from the consolidation zone become uptrend, change of trend, we will say change of trend. Okay, so in this case also, it's the same case. You can see once it breaks above the consolidation zone, we will see it as a uptrend continuation. If it moves above the moving average, you can see as the stock price going up, the moving average, the short-term moving average, all the while I use is also the short-term moving average. I never much use the long-term or the mid-term one, like MA 60, MA 50, or MA 100 and MA 200, 240. It wouldn't appear in my chart. So you can see here, all the while, the stock price moving up, the short-term set MA 5, MA 10, it will also move up to catch the trend, to catch the stock price one. Can see here, can see from the arrow, okay? So uptrend continuation, price move on top of MA 5, MA 10, MA 20, okay? And also as the price move out, the moving average also will increase in prices. It back to the activity that we just did, like short term, the moving average increase in prices, meaning the short term price increase in prices. Okay, it's the same. All our sections is link one. So if you did the exercise earlier and you understand, then now you will understand better. Okay, yeah. So like what I said earlier, if let's say the stock price when it breaks below MA 10, MA 10 is a short-term trend, meaning the stock price it breaks below MA 5 or MA 10, meaning the stock in the short term, it might not as good as earlier. The momentum is getting lesser already. So if you are a short-term trader, okay, so you might consider to sell partial of your position. This is usually what we did as a short-term trader, short-term momentum or the trend trader. I wouldn't advise you in the basis of the long-term holding or the value investing basis, because I'm not the expert in that part. So I can only advise the audience here based on what we usually did. Okay. So okay, in this case, like just now we mentioned, if break MA 10, break MA 5, short-term lose momentum. Okay, but MA 20, like back in our first slide, we say that MA can act as resistance and also support. Okay, so when it breaks MA 10 or MA 5, usually when it breaks MA 10 already, it will go to MA 21. Usually, we will say usually, because short term it cannot find support. Like MA 5 cannot support, MA 10 cannot support. What is the next nearest support which the stock price can find, which is MA 20? So if you have no position, of a certain counter, you see some counters keep on going out in prices, but you never had the chance to catch it, to make any entry. You're scared of chasing high. Okay, never mind. You wait until one day when it start to come down a bit, then you feel comfortable to make an entry. You make the entry near MA 20. Near MA 20, meaning that one is the more safer price compared to you make an entry at the MA 5 support. That one is too close already. You might as well you use the midterm one, MA 20, to make an entry of the stock that you might miss earlier. Okay, this part okay. Comment 20 for MA 20, comment a 20 for MA 20 if you understand this part. Okay. Also, it's very easy. Let's say if you catch a counter near MA 20, then it start to break below MA 20. Then what you should do? You should make an exit, meaning you buy at the support level. If the support break already, you sell it. So your risk wouldn't be a lot. Okay. So this one is another change of trend. We call it change of trend. Just now the change of trend is that we change for the consolidation trend to an uptrend. So this part is that we change from an uptrend to a downtrend by reviewing what? By reviewing the moving average also. If let's say this part, you see, all the technique that we are teaching today is the real technique that we are using in our real life of trading one. Like in my case, I like to use MA5, MA10. You can see this counter is 很远. You can see when the stock price start to move strongly above the moving average. You can see the green color one. The green color one is the moving average 5 days and the moving average 10 days. So until one day, which means the arrow part, you can see in the black arrow in the chart. Also comes with a red B. Red B means bear signal. Okay. The red B, you can see it start to break below, the stock price start to break below MA5 and MA10. Oh, it means that short term is losing momentum already. So after that, the stock price continue to trend not only MA5, MA10, and also it start to move below MA20. So this part already means that, oh, the trend has changed from an uptrend to a downtrend. So all the chart that we showing now is using MA5, 10, and 20. So imagine if you are reviewing your position, like you want to make an exit, but you only make an exit when it breaks MA50, for example, then meaning you will lose a lot of profit one, because when it start to break MA50, it means that the stock price really retraced by a lot already. So might as well, when it start to break short-term moving average, so you can start locking your profit bit by bit, batches by batches. So you will lock in a higher price. Instead of when it break MA20, MA50, maybe the stock price already back to square already. Okay, I got this part. That's the reason why we short-term momentum, short-term trend trader, we use MA10, MA20, MA5. Okay. Also, let's see. This one is also the downtrend continuation. Downtrend continuation. What does it mean? Just now, when the stock price start to move above MA5 and MA10, the MA5 and MA10 acts at the support of it. So when it breaks support, like we mentioned just now, it start to become downtrend already. So the moving average in a downtrend will be acting as resistance. Okay, so you can see when this counter, when it starts to become downtrend, the stock price not able to break above the moving average, because the moving average at this moment has already turned from support to become resistance. Okay, so you can see also, like just now the 很远, if we didn't lock the profit, or at least partially of the profit in the high price when it breaks MA5 and MA10, if you hold for maybe 3 weeks more, basically it back to square, it back to where it started, meaning you hold for 1 month time, you hold for 2 months time, there's no profit. So if you are doing trading, it's not like you every day you need to trade one. You can also see the short-term moving average, then you trade accordingly to the trend. When the trend change, only you sell. You can hold 1 week, 1 month, 2 weeks, also can one. No need to be in out too frequently. Okay, but you have to react. You have to react to the situation. It's not like, oh, you see the stock price break MA5 or MA10 or MA20 already, you still do nothing. If you didn't do anything, you see from this chart, you will know that your position, your holdings, you buy, you earn, but in the end, it back to square, then you earn nothing. Okay, that's why we say lock profit. We sell when the stock price is going up. At least you can lock something in your pocket first, not to be too greedy. Okay, okay, that's a question. Do we buy on MA5 cross MA10 but below MA20, or wait for MA5 and MA10 cross MA10? Oh, this is a very good question. For me, if the MA5 start to cross out MA10, provided like all the while the counter, the MA5 never cross above MA10. Okay, for example, you see, okay, we use this case study, the current situation. You see the last green color B, can see that is the situation when the stock price start to move above MA5 and MA10. Meaning earlier you can see earlier when the stop price start to come down, the stop price not able at all to break above MA5. But the B, the green color B means bull signal. The green color B, that moment, it means that this is the first time out of all the while, it starts to challenge, we call it challenge the resistance. So this is the part where you should already take note. Not to say that you have to hantam lah, but you can already start to take note already. Okay, so when the next day you can see, it start to go above the MA5, start to go above MA10. So if you are very short-term player, like us, maybe we also do day trade. We also do short-term trading, like 3 days trade. Then you can also consider, you buy the day, then the second day it up 3 to 5%. You want to out, you want to exit, also can one. Okay, but if you are the type of the holder, like you want to hold one, after the B, the stop price start to move above the MA already. But if you are holding kaki, you are holding type of player, it cannot sustain. It cannot sustain, and eventually it went down. So it have already like reached your cut loss point or reach your entry point, then you have to be alert. Okay, so basically for us, we do a lot of short-term trading, but short-term trading, we will consider also the moving average. We not only need to wait until the like MA5 cross until MA20, only you have to make the first entry. If you are risk taker, when the first cross MA5 cross MA10, you can already make first entry. Then if the trend goes well, it cross again, MA10 cross again, MA20, maybe you can add on. You can add on. Okay. Jason, can this technique be used for intraday trading for futures, SVO, gold? Futures, I'm not really like trading it, but this technique, if you are mentioning about intraday, I would say it's definitely okay one, because we also trade intraday ourselves. Intraday, BTSD, like short-term trade. Basically, we do all this kind of short-term trading. So this is what we can share to you all. But if you're asking intraday in the future, I'm not in a position to advise. Okay, but if you're mentioning about intraday, maybe in the stock market, I would say it's definitely okay one, definitely okay one. Like maybe today the IPO, PTRB. If you see the 15 minutes chart, you can see the MA also very steady one, very steadily going up one. If after this session, you go and check. That's why if you are doing short-term trading or intraday, okay, you can use the moving average 5 and 10. You see the 15 minutes chart. If you are more aggressive player, you can see 5 minutes chart. 5 minutes chart. You can avoid 1 minute chart. 1 minute chart is too not friendly. It's not too friendly for the retail FIFO kaki. Okay, it's for the institution PDT. This another topic that I'm just sharing. Okay. So okay, so back to our part. This part is that the when MA cross out and consolidate, it means that same thing. When it started to goes up, like MA5, MA10 goes up, then there will be some time the stock price wouldn't be every day going up one. There will be some days like it will start to stop there or consolidate for 2 to 3 days. There's the part when the MA5, because MA5 is the short-term one, like just now we did the exercise. MA5 is the short-term one. So MA5, it will start to go slow. Wait for the MA10 to catch up. Wait for the MA10 to catch up. At this moment is the very good moment for you to take entry. Especially if that time the volume is low. The volume is low, meaning it consolidates with low volume. Meaning maybe it will retrace a bit, a few bits with low volume. That's really, really healthy. That's really, really healthy chart formation. You should have take notice to that kind of chart. Okay. So here comes to the last part of our webinar. Is the trading plan. Okay. Okay, sorry, I saw a question. Must the price close above MA10 for buy or close below MA10 to sell? If you are mentioning you are seeing the price, you should also refer to the what we say, the closing price. If you are not the intraday player, then a very general advice to the audience is that you use the closing price. Then if the closing price, if during an uptrend stock, for example, the price closed below MA5, you can still consider whether you want to, like exit partially. But if the stock price start to break below MA10, there's the part where I will take more focus to that. Because MA5, for me, only when certain stock those goreng stock short-term moving a lot uptrend one, it was steadily above MA5 one. So if the MA5 start to go down to catch up above the MA10, this is the place where you should maybe consider take entry. But if MA10 also break, then you need to be careful already. You might wait at MA20 to make another entry. Okay. Trading plan. Here we go. Okay, so first of all, you need to determine the trend of the counter. Like we said earlier, like during the consolidation zone, you no need to make entry one. One thing to take note about the moving average is that during the consolidation time, it will be a lot of those like cross up, cross down, cross up, cross down. That's why in the first few slides of this talk, we have already mentioned that you should also combine, like you combine the chart pattern with the moving average, it will be more confirmed. Like the chart break out the consolidation box and the moving average starts to trend out. That one is a good combination. You combine two things for you to analyze a stock. It's not only like using the moving average itself. Okay. Then the second point is that you have to determine the support and resistance. Basically, the support and resistance, what does it mean? It means that you buy at the support safer. Then resistance is the place, is the price that you should sell. If you are a short-term trading kaki, you are a short-term trading player, I would say. Okay. Then you also need to determine a strategy is that you need to trade it in a short-term, mid-term, or long-term basis. Because some of the trader or some of the retailer, they will have that kind of the mindset where, for example, I want to make this trade is for the short-term one. But maybe once I bought already, then it goes down in price. Then I tell myself, oh, this counter is for mid-term or long-term one. Okay, have you faced this type of issue? Is that this one is a common issue, because this one is the we call it the emotion part. So why not we in the first place we determine what is the strategy we're gonna use first, okay? So okay, this one is one of the strategy. Different strategy. There's no right or wrong. Just say you're gonna follow. Like, for example, if I plan, then I'm gonna follow. It's not like I plan, then I keep switching. There's useless one. So for example, this one. If your strategy is you use MA5, MA10, this setting, and you buy when the price cross out, when the stock price cross out of the MA, you can see this example. Okay, we call it MA breakout. It's like the stock price start to break above the moving average resistance. If you remember, just now we say that moving average in a downtrend, it will act as resistance. Do you all remember? If yes, comment a R. Comment a R for resistance. Comment a R for resistance. Let me know if you all able to catch it. For a downtrend counter, moving average acts as resistance. Okay? If you get this, comment a R. Comment a R. Okay? Okay, good. Okay or not? Okay. More people commenting. Okay, so like when the stock price start to trend down, you can see this chart. The green color one is the MA10 and MA5. You can see the stock price keep on being like pressed below the MA5 and MA10 because it's the resistance. Like what we said earlier. So you imagine this. One day, the stock price break above the moving average. It means that, it breaks above resistance. it breaks above resistance. Okay, so for example, in this case, the B, the green color B, it means that bull signal. It means that bull signal. And also, you can see the stop price start to trend above short-term moving average. So this one is a good timing. It might be the change of trend from a downtrend to uptrend, or from a downtrend to at least sideways. No, meaning the downtrend already stopped. Change of trend meaning it can change from downtrend to console or change from downtrend to uptrend. Okay, not necessarily the downtrend. When the change of trend happens in a downtrend, it must change downtrend to uptrend one. No, it can change downtrend to consolidation, to sideways, meaning at least it has stopped dropping. Okay, so in this case, you can plan that, okay, like my risk and reward ratio, can see the two black color line. The black color line, one is the resistance, one is the support. So you can calculate, oh, like if I buy now 61 cents, then if drop below 59 cents, okay, I cut off. But if it goes up to 65 cents, then I take profit. So you calculate the risk and reward, maybe like 1 to 2 or 1.5 to 4 in this case. So it's a good trade, it's a good risk, good risk. You lose 1.5. You win 4. So it's a good trade. So you can try. Okay. Then we can see the other example. Okay, you can see when it start to hit the line, meaning the price that we have already determined, we have already set. So we have to follow our own plan. We take profit. Even though after we take profit, right, the stop price might goes out further. But let's say if you already plan to take profit at the zone, so you just follow. No need to be that greedy Or what we would advise to even to our members, we usually advise this is that you should at least take partial profit. You should at least take partial profit. Or else, for example, if you set this price, you think that, okay, I want to TP, take profit at this price. But let's say you see, oh, like, hey, market is very active. Why not I just wait for a few days more? Then after that, it goes down. Then you never follow your plan. You like, okay, I see the money, I didn't take it, I didn't make profit of it, then it start to back to square. It's very, we will say like a bit waste. Okay, so if you are thinking, okay, the market is very hot or the stock price, more chances to go up further, you still need to partially take a profit. At least you got some profit in your pocket. You will feel more comfortable one. Actually, emotion plays a very big part in trading. So you make yourself comfortable trading. So the result or the decision that you made will be better. Okay, Jason. Usually if you notice during market, then you feel okay, you can also consider buy during market, especially when it start to break out. If let's say the stock price is very momentum that time, sometimes after market you see it's already like bomb out. So you might miss some of the good entry. Okay, some of the good entry. But for a general rules is that a lot of people, they're not able to monitor the market during the market hours. So you can do homework after the formation is formed, after the candle is formed, meaning you can still do homework at night. For example, at night, maybe for now, 8 o'clock, 10 o'clock at night, you go through the trading view filters, or you go through some of the trading views counters. Then you see which of the counters or the counter that you monitoring you have on your hand. You see which one has start to make a change in trend. Then you can start to monitor it the next day. If you are not able to, like on the spot during the market hours in a good price, you make any entry. At least after the market, you can study it and you start to monitor it the next day onwards. Okay. How to determine short, mid, and long term? Or like we said earlier, for me, MA5, MA10 for me is very short term. For me, and I also prefer short term. Because sorry to say that is like in Malaysia for the trading wise, it's not like US. It's not like US. US, like you can see the bullish trend will remain bullish one. But for Malaysia, some of the counter, you bullish, maximum 1 month, 2 months, then change another team, change another topic like that. For trading, I would say for trading, it's not for investment. If you are thinking about investment, then you focus on the fundamental. It can be 6 months, 1 year, 2 years, 3 years. But for trading, especially those momentum type, we will call it hot money, hot money. Because hot money, like for example, what is the hot money? Like where hot money goes currently? IPO counters, IPO counters. Earlier back in February, where the hot money go? Plantation counters. Every time keep changing one. If for example that time plantation counter you bought already, you win a lot, then you keep on holding until today, then no earn also. This the thing. It's like keep on got the rotation one, the rotation of fund. We call it rotation of the hot money, hot money. Okay. So let's see how many questions are. Money matters. Okay. No. Jason asked, you mean TO price? TO price is only for if the TO price it jumps a lot. Usually I wouldn't chase one, honestly speaking. Because TO price sometimes although it break out, but you have to remember that in Malaysia, it's really difficult that like especially in the current market sentiment, if break out already, sometimes it will drop back one, or it break out, you chase, it shoot out, but eventually during the end of the market, there will be the upper shadow, meaning got people take profit at the high price one. We will call it wouldn't sustain. It wouldn't much sustain. So the TO price for us is just for a reference, for just for a reference. Okay. Oh, a lot of questions. Let me see. If I miss out any, then you all can comment again. Is volume important? Is volume important? How to see volume? Oh no. Volume for me, I prefer chart pattern, chart formation. So volume for me, we have to combine with the chart pattern to see it. For example, like just now what I mentioned. For example, if you're using moving average 5, it comes down to match with the moving average 10. By the time if the volume is low, if the volume, the retracement volume is low, just now like I mentioned earlier, it's a good point for you to consider make an entry. Later, if we have more time, then I can consider share some case study in the trading view chart for you all to see the volume changes. If I don't have the time, now I can mention the name first. You can see recently is the Cheetah Global, the Argong stock. You can see it's not. You can see MA5 and MA10 after this talk. Then you confirm with the volume that I mentioned. The volume is retraced nicely in a very low volume basis. Okay. Let me see if I miss out any question. Okay. 4 and 45 p.m. there's a market matching. Not important one actually. If you are expert trader or you are the big banker, there's the place where you can you can influence some of the market movement now, but it will be too advanced to share at this moment. In short, is that from 4.45 onwards until 450, the price is we call it is like just for the TO price purpose which we are not like insti player. We can only wait until the TO price to match it unless you are a big trader or you got some money and the counter is a low float counter, meaning low volume counter, so you can play around with the TO price. Okay, so it's not important for the retailer like us. Okay, so back to the slide first. I scared later not able to finish the slide before because I keep on focusing on the Q&A. Okay, so in this case, after we hit the resistance point that we determined earlier, so we just take profit first. Okay, so this one is the midterm strategy. Midterm strategy, like we mentioned earlier, all the while we have been talking about the strategy already. So for example, if the stock price moving above MA5 and MA10, meaning it's the short-term bullish counter, like we mentioned earlier, short-term bullish counter, like earlier recently, IPO counters. If you use the indicator of MA5 and MA10, you can see it moves strongly above it one. it moves strongly above it. Okay, so for example, if you are risk, we call it risk averse player. So when it start to break below MA5, you can consider take partial profit first. For example, 30%. Okay, if it drops below MA 10, like I mentioned, MA10 for us, we see much of the MA10 now. Then you can consider taking more partially profit, maybe 70% of the profit or at least 50% of the profit. Okay, so this one is the re-enter strategy. Like just now, talk about the low volume one. Here is the part when the low volume comes in. Okay, so if let's say the MA, if you know position at all, or you have already sold your position earlier, so you want to consider a re-entry of the certain counters, certain strong counters. So you have to see if the retracement volume is low. If the retracement volume, you can see the arrow down there of the volume. If the retracement volume is low, meaning there is no big selling pressure in that counter. If let's say the banker or the operator of the counter, they want to sell out their holdings, the volume will be red color and the volume will be in the higher bar. Okay, so usually we call it a safer and a healthier retracement is where the volume is low. Where the volume is low, where the volume is low and where the price is at the support. Where is the support? The support is moving average. In the uptrend counter, the moving average is the support. Like this one we mentioned, in the downtrend counter, the moving average is resistance. Okay, so if the stock price start to hit short-term moving average support, and you see the volume is getting weaker, getting lower, meaning there's no much selling volume. So this is the time you can consider re-entry. You buy at the weak point. Okay, so this is another strategy. This is another strategy. This one is okay. Let's say you enter based on MA5 and MA10, but you hold based on MA20 because this one is for the midterm player already. They don't want to like easily let off of their strong holdings. So they will see if the change of trend happens, they will see MA20. They will see MA20. Okay. So okay, here is the part where we end our slide. So let me see the question. Let me see the question first. Okay, before the question, until here, if you're able to understand some of the moving average knowledge, comment a yes. Comment a yes. If you're able to understand, okay, moving average act as support and resistance, moving average 5 and moving average 10, 20, how to calculate moving average 250, you know, yes, meaning 1 year, MA60 meaning 1 quarter, this and that. If you're able to get something out of this event, you comment a yes for me before we go into the Q&A. Thank you. Thank you. Saw a lot of yes. Happy for you all. Okay. So let's come to the Q&A. Let me see. IPO stock are new, less than 5 years. How to have MA5? What I mean is currently the trend. Currently the team of the market team is the IPO stock, LGMS, LFT Tech, all those things, Synergen, all those are. But compared to earlier, now the trend also become consolidation. Okay, if you see MA, if you see moving average, it becomes consolidation already. Okay, it's not like as big momentum as earlier. Okay, let me see any question that I missed out. Okay, let me see TO price. Okay, I answered TO price already. Okay, if price close above MA5 and MA5 is above MA10, but MA20 is between MA5 and MA10, still buy or wait for MA10 to cross MA20? It will be a rare case. Let me think. MA20. It will be a really rare case. For me, I will still see MA5 and MA10 mostly. For me, is that because in my chart, I can share to you my own chart now. MA5 and MA10 can apply for FCPO. Can. I got 5 minutes left. I can share you all my chart. Let me see. I try to show you all my chart. So that easier for you all to understand. Able to see able to see the chart. Can okay. So first thing first, somebody asked about a FCPO. So you see same thing. For example, okay, you see very easy one, you see this one this chart is MA5 and MA10 still the same. What I sharing just now is basically what we did, what we use, what we do. Okay, so you can see here. You see the price never break above the MA1, meaning what? Meaning short term, the stop price still bearish. The stop price still bearish. Meaning there is like not able to break above the resistance. Not able to break above the resistance. It's basically the same as what I presented in the slide one. Just that this one is FCPO. Okay, you see this part also trending below the moving averages. Okay, trending below the moving averages. Okay. What is the additional indicators that I use for other than moving average? Bollinger Band. But for me, I still like moving average with the chart pattern. Trust me, chart pattern is the fastest. Because it focuses on the candlestick. It focuses on the direct buy sell and the changes in the instant prices. So we call it candlestick pattern, price pattern, like those chart patterns. Then I combine it with the moving averages, so it will be more useful. Can we use MA and EMA together? This one is a very good question. Actually, me personally, earlier I used before. Okay, if just now if you all pay attention to the difference between MA and EMA, EMA it will focus more on the short-term changes in prices, okay? So you can consider EMA5 with MA10, meaning the short-term changes in the price, it will capture easier in the EMA5. Then the smoothen one, you still use MA10. Hope I answer your question. But this one, earlier I used before, 1 or 2 years back, but now I no longer use. But it will be a good idea for you to set this indicator in your future, okay? In your future, because sometimes I also set this, okay? Let's see, any question? Why is the seller volume so high, however the price still keep going up? Sometimes you see people keep on selling, but if you're able to see the queue, in the buyer queue, they will have some people to tank. We call it tanking. You queue buyer, like maybe the operator, they queue buyer. And also, actually, if you're able to get 10 depths, meaning you're able to, like most of the people, they only able to get three depths, meaning you can only see 3 prices of the buy side, 3 prices of the seller side. Then you can request more. Then some people, after they requested, they can see 5 prices of the buyer, 5 prices of the seller. But if you're able to do so, you should get 10 depths. Like personally, I use 10 buyer, 10 seller, meaning I can see 20 prices. So you can actually see what is the prices, what are the prices which the buyer really there want. Because usually a lot of people, they're not able to see so far. So a lot of the queue is fake one. Like the first 5 queues, million over. Then after the first 5 queue, only like few thousand. But a lot of people, they're not able to see. Okay. Let me see. Let me see any question I missed out. Elvin says some coach only teach students to do setting of MA without telling and teaching us the actual reason behind the numbers. Can I say that the number is a secret? Not necessarily is a secret. just that some of them, they also don't know what is the reasoning behind. Just like, for example, like just now when I teach, I say, okay, now you understand how MA 240, what does it mean? Meaning 1 year, 1 year moving average price. Then MA 60, what does it mean? It means one quarter MA price. Because they need to teach you all what to understand, what is the reasoning behind. But sometimes a lot of them, they didn't know also. They will just follow, they follow. Like just now I also mentioned there's one part lah. That one is the moving average part, where is a more advanced part. But me personally, I didn't use that, which is the Fibonacci moving average. You can use moving average 3, 5, 8, 13, 21. That is very special. If you only considering 2, the special one will be 13 and 21. 13 and 21. But me personally, I didn't use that. You can consider. You can see how is the result. Okay. That is the Fibonacci one. Some people, they only copy. So they also didn't know what is the reasoning behind. If you understand Fibonacci, then you know, oh, this one is the Fibonacci numbers. Okay. Let me see. For short-term trader or swing trader, it's important to subscribe to live data when using MA. If you want live data, for me, I use TradingView. But what I know is that I heard the KIC screener, they also got the live data, like 50 ringgit per year. I'm not sure. I heard only. I heard from people. So if 50 ringgit per year, I think it's very, very worth to subscribe. So using live data more or less provide more advantage for us. Because we buy a stock, we already buy maybe few thousand, 10,000, 100,000, like, you know, so might as well you spend a 50 ringgit to buy a live data to enhance the whole trading process. Still worth, Okay, let's see if I miss anything. Okay. So, yeah. So I think that's all. So if you think this webinar is good, comment a good for me, so that I can know I share something insightful for you all. Then I'll pass the floor back to Shaz. Thank you everyone. Thank you.
Thank you so much, Mr. Yong Chee, for the great session today. And thank you so much for, attending to each and our participants' questions today. So before that, let me share my slide. Can you guys see my slide? All right. So, oh wait, why is it's not sharing? Okay. Okay, can you guys able to see my slide? I think yes, should be yes. Okay, before that, let me share what is the Bursa Academy. Bursa Academy is a one-stop e-learning platform that provides investor with a continuous and holistic learning journey. If you want to find your learning material, you are able to find in the Bursa Academy platform, and you also can find our past recording video and also our slide at there. So it's a simple, user-friendly, and can be accessible anywhere, anytime at your own pace. If you want to learn more, you can go to our website, which is www.bursaacademy.bursamarketplace.com, or you can scan QR code on their screen. All right, next. For our next webinar, which the topic is the potensi pelaburan saham terbitan awam, which is known as IPO. Which is fall on 30 September 2022, which is on Friday, 8:30 p.m. to 10 p.m. same time. And the registration link Shaz already put in the chat box, so you can register now. Okay. All right. For those of you have questions that Mr. Yong Chee hasn't answered yet. Oh, I think he already answered. Wait, why my? Okay, so you can contact Mr. Yong Chee for further questions, and if you don't understand any of it, you can contact him. All right. Hi, Mr. Yong Chee. So I think this will be the last time I'm gonna see you again. So thank you so much, and hopefully that I can meet you in future. So thank you so much, and sorry, I apologize if any inconvenience caused by me. All right, thank you everyone. See you guys again for our next webinar. All right, good night.
Thank you. Thank you.